Hello everyone, welcome to today's RBI revision session for March 2023 where we are going to cover all the notifications, press releases, circulars, reports that we have covered in our sessions, okay? As well as I have brought for you some extra questions also, so you get to practice the finance current affairs, the most important finance current affairs, okay? So I'm getting hello, good morning Nilesh and Sorish and Tech and Gain. So it is so good to see all of you present here, and today let's practice the RBI circulars notifications through the quizzes, through the MCQs, and this is covering the March 2023. Okay, so this is going to give you the idea that how right on track you are, how well you are preparing, okay, as well as the exam can be very near, and that's why you need to be very prompt and you should be preparing very well. So I hope that today you will be able to answer all the questions very well. So I'm getting, okay, so many answers. Okay, good morning, Avinash, Ankit, good morning, Madan. So now let's start with the session. But before that, there is a big announcement that we have brought for you this RBI guidebook. Through this guidebook, you can get all your common queries answered. If you want to know about the examination, if you want to know about the preparation, if you want to know about the MCQs and everything like regarding the preparation and organization, all these can be cleared through a single guidebook. You do not have to visit different links, you do not have to visit different websites, okay? And this is absolutely free of cost, so you can easily download this guidebook, and the link is provided in the description box below. So do download this guidebook. So it is not MCQs, it is of course CPY, the cutoffs, okay? So now starting with the first question, that is regarding recently in March 2023, the RBI launched the mission Har Payment Digital on the occasion of the Digital Payments Awareness Week 2023, which we have discussed. You have to tell about the theme of the campaign. Okay, so good morning. Yes, that is good that you have taken out a soft copy of that. Okay, so I'm getting the answers. The answers I'm getting is D from Nilesh. Sorry, so it is yes. Digital payment apnao औरों को भी सिखाओ. So this is the answer. I hope you all know that we have covered this Digital Payment Awareness Week for the 2023, in which the Har Payment Digital was a big mission that was launched, and the message that is being conveyed through this Digital Payment Awareness Week and through the Har Payment Digital is digital payment apnao औरों को भी सिखाओ. Okay, so in English it is adopt digital payments and also teach others. So this we have covered. You have to remember the message very clearly, and the other question that you need to answer is also related regarding the Digital Payments Awareness Week. And so there are many different programs that are being run under the Digital Payment Awareness Week, and under this week there was the Har Digital Payment, and under this there are the other programs also. So this question is talking about one such program, that is under the DPAW 2023, payment system operators were to adopt dash villages across the country and convert them into digital payment enabled villages. So how many villages had to be adopted? So I'm getting the answer C, and absolutely all of you are absolutely correct. It is 75 villages had to be adopted by the the payment system operators, and they had to convert the 75 villages into the digital villages. Okay, the digital payment enabled villages, they had to conduct 2 camps in each of these villages to enhance the awareness and onboard the merchants in the village for digital payments. And the other program that was regarding the RBI to conduct the awareness and outreach programs under the Jan Bhagidari events. Okay, so this is also the one of the programs. So these two are also very important programs that were being run by the RBI during this Digital Payment Awareness Week. So now the next question is regarding the IREDA, that is recently in March 2023, the Indian Renewable Energy Development Agency has been granted which kind of status by the Reserve Bank of India. So you have to tell this now. So which kind of status has been presented to IREDA? I hope you all remember. So here the infrastructure finance company, this status has been provided to IREDA. Okay. So here RBI has granted an infrastructure finance company status to Indian Renewable Energy Development Agency. Why the infrastructure finance company status has been provided to IREDA? Because IREDA is completely, it is working, it has been working for enhancing the infrastructure, financing the infrastructure for the renewable energy, and that's why this kind of status has been given to IREDA, so that it can generate the funds, quite easily. Okay, it can take higher exposure to renewable energy financing and raise funds at competitive rates. Now the next question is regarding the MOU that has been signed between the Reserve Bank of India and the Central Bank of United Arab Emirates. Okay, so you have to tell that which of these statements is correct. So as we move forward, there will be harder and harder questions that you will have to answer. Okay, so I hope you are able to answer the questions. So under the MOU, the two central banks will collaborate on various emerging areas of fintech. That is correct. So especially they are going to focus on the central bank digital currencies and the exploring the interoperability between the CBDCs of the UAE and the Reserve Bank of India. So the CB, UAE and the RBI will jointly conduct proof of conduct concept and pilots of multilateral CBDC. So I'm getting the answer D here. Some are saying C, some are saying D. So which should be the right answer? So here the incorrect statement you have to tell. So which is the incorrect statement? C is incorrect. Okay, C is incorrect. That is absolutely correct. That this statement is incorrect. Why? Because the RBI and CBAU signed an MOU in Abu Dhabi. Okay, so that is, yes, C is incorrect. And did you see this? Multilateral. It should not be multilateral, right? It should be bilateral because two countries are engaged, two central banks are engaged. So this statement becomes wrong. So here I have provided you this specially so that you can be very clear that you have to be very thorough in reading the questions, because what the RBI plays in phase 2 especially is RBI gives quite typical hard to read kind of sentences, big sentences. So here you have to be very clear. Okay, so yes, E is the right answer. B and C. Okay, both are incorrect. Multilateral cannot be here, as well as instead of New Delhi it should be Abu Dhabi. Okay, so I hope you remember that the RBI, that is the Central Bank of India, and the Central Bank of UAE, they both collaborated for the fintech, especially for the CBDCs. Okay, interoperability of the CBDC, the cross-border payments through the CBDC, that is the e-rupee of India and the CBDC, Central Bank Digital Currency of the UAE. Okay, so for this the MOU has been signed, and this is a big MOU because RBI has just started working on the CBDC. RBI has just started bringing the CBDC out. Okay, so be very careful regarding this. See, I cannot make the judgment now that when the exam will happen. It is expected in the start of June. Okay, in May it is expected that we will get the notification. So in May or June, May ending or June starting, it is expected that the exam will happen. But I am not bringing out the notification, so I don't have the clear idea. But we are expecting by the May end or June starting, the exam will happen, the phase 1 will happen. Okay, so this is what I can tell you. So now coming to this question, okay, the central banking awards are released by the central banking publications every year, and in this year the big achievement has been done by our governor, by RBI's governor, that is Shaktikanta Das. So he has been awarded as the Governor of the Year award by central banking publications under the Central Banking Award. Now you have to tell that which has got the best central bank award. The best central bank award for the Central Banking Awards 2023. So if you know this, that means your complete news is covered. Okay, so which has got the Central Bank of the Year award? So try to answer this one. Yes, so I am getting the National Bank of Ukraine. So that is correct. So the National Bank of Ukraine has got the award for the best central bank. Okay, so here you have to remember that the Shaktikanta Das has got the award for the Governor of the Year, and the best, or we can say the Central Bank of the Year award has gone to National Bank of Ukraine. So next question is regarding the recent foundation that has been placed by Shaktikanta Das, RBI's governor. So laid the foundation stone for the establishment of a greenfield data center. So a data center will be established, and the enterprise computing and cyber security training institute will be established where? Okay, so in what? Okay, so remember that cyber security is very important for the Reserve Bank of India, especially for the training. The RBI wants that there should be the cyber security. Okay, that there should be new trained personnel that is provided to the Reserve Bank of India. So here you have to tell that which is the correct answer. So I'm getting the answer E, that is Bhubaneswar, Odisha. That is absolutely correct. Okay. So this is the correct answer. Now I hope you know it is very easy. You just have to remember that where it has been established, that is Bhubaneswar, Odisha. Next, coming to this news article, that is regarding the PNB has made positive pay system mandatory for the check payments over rupees 5 lakh and above in an effort to protect consumers from fraud. Okay, so the positive pay system was brought by the Reserve Bank of India for the check truncation system, for the check truncation. Okay, this will become effective from April 5, 2023. Which of the following statements you have to tell is correct regarding the PPS of the Reserve Bank of India? So the directive for PPS. So the directive for PPS is issued under Section 10 to read with Section 18 of the Payment and Settlement System Act 2007. So that is correct. See, if this is correct now, Section 18. If this is correct, so means there can be no mistake in the first statement. RBI had said that using PPS in case for checks of rupees 40,000 and above presented in check truncation system would be at the account holder's discretion. So if you know this very clearly, yes, I am getting the answer from Nilesh and Millie. Yes, it should be 50,000. Okay, so the RBI had said that the PPS positive pay system will be provided only for 50,000 and above checks. Okay, so only for those checks the customers will have the discretion, the consumers will have the discretion to use the positive pay system for 50,000 and above checks. Banks can consider making PPS mandatory for checks of rupees 5 lakh and above. So this is also correct. So only wrong statement. You have to tell the correct statement. So correct statements are A and C only. So that is E is the right answer. B is only the incorrect statement. So I hope you understand this. Okay. So now kindly remember this specially, the Section 18 of Payment Settlement Systems Act of 2007. For 50,000 and above, the RBI has said that the PPS will be allowed. It is at the discretion of the consumer to use it or not. For the 5 lakh and above, the RBI has said that it should be made mandatory, but it is as per the discretion of the banks. Okay, so remember this very clearly. The data you have to remember. So now coming to the liberalized remittance scheme that is available to any resident. So the liberalized remittance scheme was used where? It was used during the UPI Pay Now linkage news article. Okay, that the UPI Pay Now has been linked. So Pay Now is of Singapore and UPI is of India. So this has been linked under the liberalized remittance scheme. They have to work. Okay. So now liberalized remittance scheme is available to any resident, individual, adult or minor. The scheme was introduced on February 4, 2004 with a limit of 1. So it is not necessary that they will ask you the limit of the current. They can ask you the limit when it was introduced, because it is also very important. Okay. So yes, I am getting the answer C. That is correct. It is 25,000 USD US dollars. Okay. And the current limit is what? It is 2,50,000. Okay. So the current limit is 2,50,000 while the limit at that time was 25,000 USD only. So now coming to this question. First of all, read this question very carefully. Again, you can make a mistake in this question if you are not reading the question very well. Okay. So first of all, try to read this question very clearly, very carefully. No, it is 25,000 USD. Just a sec. Yes, it is 25,000 USD when it was introduced now. It is not 2,500. Okay. So be careful with the numbers. Nilesh, your doubt is cleared or not? So now, okay, I am getting the answer E. I am getting the answer E. You have to tell the incorrect statement. Okay. Again, I can tell this is not incorrect. This is not incorrect. Okay. Tell me the incorrect statement. No one is able to answer this rightly. So let's start with the first statement, or let's start from down only. Capital account remittances directly or indirectly to countries identified by the Financial Action Task Force as non-cooperative countries and territories. So this is not allowed. Capital account remittances directly or indirectly to countries identified by, it should be, it is not allowed. It is not allowed. Okay. So the statement got deleted. It should be completely this. Okay. So this is banned. Capital account remittances directly or indirectly to countries identified by the FATF as non-cooperative countries and territories from time to time, it is not allowed. It is not available. Okay, so that is missed, but it is not allowed. So that's why this is not incorrect if we read it completely. Okay, RBI introduced the LRS in 2004, allowing Indian residents to make individual foreign exchange transactions with relative ease. So that is correct. It was introduced in Feb 2004. Resident individuals can avail of foreign exchange facility for the purposes mentioned in part 1 of schedule 3. So schedule 3 talks about the business trips. It talks about the day to day, like you are going out for as a tourist or you are going out to study, for the foreign exchange management for the current account transaction. So this is also allowed under the LRS scheme. It is part of the Foreign Exchange Management Act. It is the LRS is a scheme that is a part of FEMA. Okay, so this is incorrect. Why this is incorrect? The A statement is incorrect. The LRS is unavailable to corporate partnership HUF. So this is correct, but here this should not be present. So LRS is actually present to, it is actually available to sole proprietor also, because the sole proprietors are considered as individuals. So the remittance can be made to the sole proprietor under the LRS scheme because the sole proprietors, they are the single owners, so they are considered as the individual only. So here you have given the E answer, so I can understand that why the confusion was made, because the statement was not very clear, it was not complete. But here if you are saying E statement is wrong, you should be clear that the A statement should also be wrong. So here it is the mistake, but E, if we complete it, then the A statement is wrong. Okay, so A is the wrong statement here. Now coming to, I hope you understand, we have already done a session on the liberalized remittance scheme and the schedule 3 of FEMA, the FEM, the foreign exchange management current account amendment rules. This includes the business visits and any kind of private tourist they are going, or the for education they are going. Okay, so I hope you have understood this. Now coming to the next question, that is regarding the NPCI guidelines for the interchange fees. So I hope you will be able to answer this very clearly. Okay, so I'm getting your answers at a lag. So the National Payments Corporation of India recently announced that from April 1, an interchange fee of up to 1.1% on the merchant UPI for the payments made using prepaid payment instruments. So this will be done. So this is absolutely correct. Okay, so the interchange fee is of 1.1% on the merchant UPI for the payments that are made through the PPIs, that is payment, the prepaid payment instrument. So which is the incorrect statement? I am getting the D. Yes, this is the incorrect statement. So the B statement is also correct. For payments greater than rupees 2000 through PPI to UPI, the merchants will have to pay 1.1% fees. So this is correct. The payment service providers, that is the wallet issuers. So payment service providers are what? The Paytm, the PhonePe, they are the payment service providers. They are providing the services. So the wallet issuers, they are the payment service providers. They will receive the interchange fees. So here I hope you remember the process, that what was the process? If you are using your wallet to pay, let's say 3000 to the QR code to the merchant that has the QR code of PhonePe, let's say. So you are using the Paytm wallet to pay to the QR code of PhonePe. So this is the interoperability. Now through the Paytm wallet also you can pay to the PhonePe QR code, Google Pay QR code, Bheem QR code. So to provide this kind of interoperability between the apps, what has been done? The 1.1% of the interchange fee will be levied from the merchant. So the merchant, if it is getting 3000 or let's say it is getting 5000, so the merchant will get the 5000, and then the merchant through its bank, like the bank will get the 5000. So the bank from the merchant account, it will cut 55 rupees that will be paid to the Paytm wallet. So this is the whole process. I hope you remember. So I hope this is very clear. If not, I will explain it again, because you need to have the clarity that the payment service providers will receive the interchange fees, the wallet issuers will receive the interchange fees. The NPCI has permitted prepaid payment instrument wallets, so this is absolutely correct. The interoperability has been provided between the apps so that the Paytm wallet can be providing the payment to the UPI QR code of any app. Okay. The interchange pricing will be reviewed by September 30, 2023. So I'm getting the correct answer. Thank you so much, Javed Hussain. It is so nice to see these kind of comments. Okay. So I hope you have understood this very clearly. If not, you can read it that our associate Paytm Payments Bank. So this has issued the Paytm wallet. So now this will be receiving the payments. So from now on, the Paytm Payments Bank will earn 1.1% interchange revenue when Paytm wallet customers make payments on merchants acquired by other payment aggregators or banks or the payment service providers. So I hope you have got this very clear. So you can see that the interoperability has been provided between the UPI of PhonePe, between the Paytm QR code. Okay, so such kind of interoperability is present now. So now coming to the next question, the interchange fee will not be applicable to peer-to-peer as well as to the peer-to-peer merchant transactions, that is small merchants, the small merchants. So how they are categorized as the small merchants? They have been categorized by the NPCI as small merchants. P2PM is the NPCI classification for the small businesses which have a projected monthly inward UPI transaction of less than or equal to what amount? So that you have to tell. So here the direct answer is rupees 50,000. If they are getting less than 50,000 of the transaction of the payment through their UPI, so they will not come under the interchange fee. They will not have to pay the 1.1% of the fee. Okay. So here is the answer. So you can see this. Now coming to the next question, which of the following statements is or are incorrect regarding the UPI credit card linking by RBI? So recently the SDFC Bank. So read this first. So RuPay, Visa, MasterCard credit cards will be linked to virtual payment address, will be linked to the UPI. Is it true? So you should be directly seeing this and you should be telling no. That no, it is only the RuPay. It is only the RuPay, not the Visa and MasterCard. Only the RuPay credit cards are allowed to be linked to the UPI. Okay. Next is consumers of Punjab, customers of Punjab National Bank, Union Bank of India and Indian Bank were the first to be able to use the RuPay credit card on UPI with the BHIM app. So this is also correct. These were the three public sector banks that were able to connect their RuPay credit card with the UPI because they were issuing the RuPay credit card. ICICI Bank, you should see this and you should cancel this. So it is SDFC Bank that has become the first private sector bank in the country to go live on the UPI with its RuPay credit card. So which is incorrect? This statement is incorrect. This statement is incorrect. That is A and C statements are incorrect and that's why it is the yes. So A and C is the right answer. E is the right answer. Here you can see that these three were the public sector banks that were able to provide the RuPay credit card and UPI interlinkage. Now the SDFC Bank, that is the first private sector bank that will also be able to use that will also be able to provide the RuPay credit card linkage with the UPI. Now coming to the next question, recently in March 2023, Axis Bank completed the acquisition of the consumer businesses of Citibank India, its non-banking finance arm. You have to tell that which corporation allowed this kind of acquisition. So usually when the banks come in our mind, we tick whatever there is related to RBI. So we say that yes, RBI should be the answer, right? Whenever the bank comes in our mind, who is the regulator? RBI. Who is the monitoring authority? RBI. So now here, what will be the answer? It will be the Corporation Commission of India, because we are talking about the acquisition. So you have to be careful here. Okay, that's why I'm saying that yes, when we talk about banks, we talk about RBI, but here you have to be clear that we are talking about acquisition. That should come under the Competition Commission of India, because if acquisitions happen and a bank becomes a very big bank, that it is very hard for the other banks to compete. That bank can create monopoly. So for not having that kind of situation, there is the Competition Commission of India. That monopoly does not create in our country, because monopoly is very harmful for the consumers. So that's why the Competition Commission of India, you have to take the permission from this authority to be able to acquire, to be able to do the mergers. Yes, very good. So yes, sorry Toshit, very good. It is so nice to see that all of you people are giving the right answer, Supriya and Naveen. So now here right answer is D, and I hope you have remembered the important points that was regarding the data points. So this was in the news article. Try to have the clarity. It is not important that directly the data can come in the examination. Okay, so only the important data you should read it and you should have the clarity. Okay, that Axis Bank has become a very big bank now because it has acquired the Citibank. Now coming to the next question, but this data can come in the phase 1. Okay, I am talking about phase 2. In the phase 2, this kind of question will not come. So now coming to the 14th question, here you have to tell recently Department for Promotion of Industry and Internal Trade released April to December data of FDI flows. So here, which of the following segment had the steepest decline of 77%? Which of the following sector or segment has declined the most in case of FDI flows, inflows? So which has got the most decline? That is 77% of the decline has happened in the FDI inflows if we compare it to the April to December of the previous year of the previous. Okay, current fiscal means it is talking about 2023, 2022, 23. Okay. So here the right answer is automobile industry. Okay. So that is answer is D. I hope you understand that the automobile industry was the one. Here you can see automobile industry is the one that has got the steepest decline from 43,884 to 10,000 only. The FDI inflows has gone down by this much. Okay. And it is in crores. Okay. Remember this. So this is, I hope you will remember that the most decline is in the automobile industry and the FDI inflows in total have declined by 9%. So here you can see by 9%. The highest decline in the FDI inflows as per the states is in Karnataka, and the highest growth is in Gujarat for the FDI inflows. So this is some important points that can help you in the examination in the answer writing also. Okay, so these points regarding the FDI inflows can be important. So remember these three diagrams, the important point from these three diagrams, nothing else you need to understand from this. Now coming to the next question, that is recently the center brought the cryptocurrencies under the ambit of the PMLA. We all have heard about this. We all have discussed about this, and this is very important because the cryptocurrency is a big topic right now. Okay, so bringing it under the regulation, because you cannot stop cryptocurrency. If you stop cryptocurrency, it is running in many other countries. So it will be the illegal activity will continue flowing. So that's why to regulate the cryptocurrency, this has been brought under the ambit of PMLA. So you have to tell the incorrect statement. So which of the following is incorrect? I'm getting the answer D. So here it should be 5 years. So all other statements are correct. Okay. Only the D statement is incorrect because it should be 5 years. Okay. So here you can see that all such intermediaries, that is the exchanges, that is the custodians of the cryptocurrencies, they need to maintain a record of all transactions, and such records have to be maintained for a minimum period of 5 years. So this you have to remember. Okay. Now coming to the next question. So for the IFSCA has constituted an expert committee to formulate a roadmap to onshore the Indian innovation to the GIFT IFSC. So you have to tell that who has become the head chairman of the expert committee. So it is very easy. It is G. Padmanabhan. So recently the IFSCA paper will also happen. So this can be important for that examination. Okay. So remember this for that if you are preparing. So now coming to the next question. So it was the expert committee was constituted so that onshoring of the Indian innovation can happen back in India. Why? Because the Indian startups, the Indian fintechs, they were going outside. They were setting up their industry outside. They were setting up their startup outside. So to bring them back in the country, to bring them in the GIFT IFSC, this kind of expert committee has been made. So now, which of the following will be the correct answer? Recently, RBI has released meeting schedule of the Monetary Policy Committee for the financial year 24. Which of the following statement is incorrect? So this is a static kind of question regarding the Monetary Policy Committee. So try to So Praveen has a question. Let's take that question at the last. So Praveen, yes, RBI approval is needed. But at that time, the question was particularly talking about the CCI, okay? That for acquisition, whose permission is needed. So it is particularly like when you are acquiring, when you have got the approval of the RBI. After that, for the acquisition, you have to get the approval of the CCI, okay? So RBI can only like provide you the guidance, but the approval has to be got from the CCI, okay? So now here the D statement is wrong actually. So the first statement is correct. It was amended. The RBI Act was amended in 2016, September 2016, to provide for the statutory and institutionalized framework for a MPC. Okay, the MPC is required to meet at least 4 times. This is correct. They meet 6 times, but it is as per the decision of the Reserve Bank of India that they are meeting 6 times. But at least they have to meet 4 times in a year. This has been specified in the MPC in the RBI Act, which was amended. Okay. Each member of the MPC has 1 vote, but the governor has a second or casting vote. So it is as per section ZI of RBI Act, dates have been decided on which MPC will like the meeting, okay, will meet during 2023-24. So the schedule has been decided as per the 45 ZI. So here, first of all, why this kind of question can come? Because recently the schedule was released, and in the notification, this is the notification given by the RBI, in which it was particularly written that as per section 45 ZI of Reserve Bank of India Act 1934, the schedule has been decided, which we have also done. Now here are the schedules if you want to understand the most important. So it is 45 ZA, in which the inflation target is decided, that is 4% plus minus 2%. So this is decided as per the government in consultation with RBI for the period of 5 years. Okay. So the next important is 45 ZI. So this is meetings of monetary policy committees. So the schedule is provided under the 45 ZI. Okay. So I have taken a complete session of the monetary policy committee, which you can see, in which we have covered the static part. So the MPC was formed in September 20, the RBI Act was amended in September 2016 for the formation of the MPC. May 2016, the RBI Act was amended for including the flexible inflation targeting, that is we say 4% plus minus 2%. That is the flexibility is provided of the plus minus 2%. It is not like RBI has to bring the inflation to 4% only. Otherwise, the RBI is doing very bad. No, it is plus minus 2% is provided for the flexibility. Okay. No, you do not have to study subsections. It is only the important, like the inflation targeting, you should have the information in the back of the mind that it should be this. And this is important, the subsection become important, the section become important because it was given in the RBI's notification, and in the previous year a question came not on the section, but like the section was given and you had to tell some kind of answer. Okay, so due to that I have provided you this so that you can understand that which sections are important. Okay, so here is the question. Recently RBI released the web publication in which the quarterly basic data has been provided. Now here again too much data, like if I show you this, too much data. So what you have to remember is the deposit, the credit rate, the credit growth rate you have to remember, and the deposit aggregate deposit growth rate you have to remember. So these 2 data points are very important. So I'm trying to tell you that which is the most important that you have to do. So here the right answer is 16.8%. So recently on May 28th 2023 this notification was released. So this notification, only here you have to remember this, the bank credit growth stood at 16.8% in December 2022, that is for the October, November, December. So this is for the quarter of October, November, December 2022. Now here the personal loans, the women loans, share of female borrowers. So these other data points are not very important, because if you start reading all the data now, the data will never end. So you have to mark that, okay, this is important data because this was notified in another notification of RBI in Feb also. So the credit growth is important, the data for that, and the aggregate deposits increased by 10.3%. So the data for deposits growth is also important. So this is the data that you have to at least know. March not May, for what you are telling that about. So if you have any query, write it clearly. So I hope you have understood those very clearly, that which data is important, which data you must know. Now try to give the right answer of this one. We will discuss this notification a little so that you have the clarity about this notification also, which we have not covered in our session. But today let's have the brief idea about this notification, okay? So here the question is regarding the draft guidelines on minimum capital requirement for market risk under the Basel III. So you have to tell that which of the following is incorrect. So first of all, the guidelines shall come into effect from April 1, 2024. Okay, so this is incorrect. The new norms draw a boundary between the banking book and trading book. This is correct. The new guidelines allow short position on any instrument except in derivatives and central government securities. Short position is allowed, it is allowed only for the derivatives and the central government securities. It is actually banned for all the other instruments. Okay, so here the right answer for this is the D, that is A and C, because A and C are the incorrect statement. So let's discuss these guidelines a little so that you have the clarity about these guidelines. But again, you do not have to go too much in depth. That's why we have not discussed it in a separate session, because this is a guideline that is not very important from the direct exam point of view. Okay, you do not have to go too much in depth in this. So here you have to remember that it is applicable to all commercial banks excluding the local area banks, payments bank, regional rural banks and small finance banks. First be clear about this. It is going to be in effect from April 1, 2024, and this new norms, these draft guidelines place a boundary between the banking book and the trading book. So trading book which are subject to market risk. So there are the risk in the market, that the market is very volatile, okay? Those to be included in the banking book which is subject to credit risk, capital requirements. Now banking book, there is the credit risk. Credit risk, it is banking book. So bank is giving the credit. So there is some risk involved. So that is why the banking book has the credit risk. The capital requirement for both specific risk and the general market risk will be 9% each. The new guidelines ban the short position on any instrument except in derivatives and central government securities. So these are some data points that you need to remember. For the paid students, we have provided the complete notification with the key highlights. For here also, I have provided you the important points, okay, that you need to remember, okay. So here are the definitions which we usually provide with our document, but I am providing you here for this specific notification so that you can be clear about what is market risk. That is risk of losses on financial investment caused by adverse price movements. I have told you quite well volatility there is in the market, and that's why the market risk is with the trading book. The banking book has credit risk because there is a possibility of a loss resulting from a borrower's failure. The short position, yes, I'm going on that only. So wait a second, huh? So now coming to the Basel III, I hope all of you know about the Basel III. The equity risk is the financial risk involved in holding equity. So you have the equity of some company, so that also involves some risk. Now coming to the short position. So I have told you about the short position in some previous session also regarding the government securities lending. So short position, here you do not have some shares, okay, but you are selling those shares. So what happens that in the intraday, the short positions are allowed, in which what you do is you buy, you are selling 100 shares, you are selling 100 shares, okay, because you know that in the future those shares are going to go down, or you are selling those shares because in the future it is going to go up, but you do not have these shares. So what you will do is you will wait for the value of these shares to go down, and then you will buy those shares. You will buy those 100 shares to sell. So that is, you are selling the 100 shares at, let's say, rupees 100. Okay, but you do not have this share. So how you are selling? Because you have to settle the share at T+1. That is, today you are trading, but tomorrow you have to provide this share. So today you are selling this share. You are saying that I will sell this shares today at rupees 100. but you have to provide the shares tomorrow. That's why you have the buffer of 1 day. Now today only you have to buy these 100 shares. Now you are expecting these shares to go down from rupees 100 to rupees 98 or 97. So you will profit rupees 2 or 3. If you buy at rupees this and you sell, you have to sell at rupees 100. So this is the money that you would have got when you provide your shares. So this is a complicated concept, but try to understand it very clearly that you are selling the 100 shares. Okay, you are selling the 100 shares. You do not have the shares. You are selling the 100 shares at rupees 100. You will buy the shares. Today only you have to buy it. Otherwise, the market will close and the market will buy it. The demat account will buy it for yourself. Okay, the broker for yourself will buy for you only. So buying 100 shares for a lower amount, or if you are speculating wrong, so that is the amount goes up, so you are making the loss as per the amount that is going up. Okay, so this is the short position that can only happen. Now the short position is allowed only for the derivatives and the central government securities, because only for these they are provided, not on any other instrument. Okay, so the short position usually is done for the intraday trading, where the settlement will happen tomorrow, but the trading is done today. The promise is done today. Understand it like this, that the promise has been made of this and this has to be done. Otherwise, a big, very big kind of risk you have to take. Okay, very big, what do we say that, कि बहुत बड़ा तुम्हें देना पड़ेगा पैसा. Okay, so that you have to do otherwise. Okay, so you have to sell it the 100 shares tomorrow. So I hope you have got the brief idea. Now, what is the homework question? So here you have to tell me regarding the projection of the real GDP and the inflation that was given by the Monetary Policy Committee in its recent meeting, and the real GDP projection that has been given by the World Bank. Okay, so because the real GDP projection has been changed by the World Bank, and the Monetary Policy Committee has also changed its projections. Okay, so try to give me the right answer of this in the penalty. Sorry. So penalty, you have to give the penalty if you are not going to give the shares by tomorrow. Okay, so penalty has to be paid. Yes, thank you, Jay. So these are the answers that you have to give me in the comment section, and do tell me that how many questions you did right. Okay, so there were 19 questions, right? So tell me that out of 19, how many you were able to do right, and consider this question as one question. So that is out of 20, how many you are able to give right. Okay, so if you are above 15, you are doing very well, though a little data you might be forgetting, but you are doing well. But if you are below 10, that means you have to revise a lot, you have to practice a lot. Okay, thank you, Rakesh. Okay, so do you understand anything that you are not able to understand, that you want to ask, like regarding the short position, also regarding any of the notification that we have done in the revision session? You can ask me right now, otherwise we will finish this session. Yes, in RBI you will get the tricky question. So you have to practice a lot. See, today you were able to understand that you have to read the options very carefully. So that's how you get accustomed to the tricky questions, when you practice a lot. So that is what you have to do. And after that, when you go to the exam, you will be very accustomed to the position of the RBI, that okay, I will be getting the tricky kind of questions. So do not worry about that. If you practice a lot, if you read a lot, you will be good. No, I don't think so that we provide such free, like you are getting the videos of the PIB, you are getting the videos for the finance current affairs. So we are trying to cover the important notifications, the important news through these sessions, but we are not providing other free material. Okay. No. Like in margin, like there can be borrowing, but in short selling, what you are doing is, let me explain you in a better manner. And I hope now, short selling, what is happening, that you are selling the shares that you do not own. You are not even borrowing these shares. So you are selling those 100 shares for 100 rupees. You are selling it today at trade day, but you have to settle it tomorrow, that is on the settlement day. So you do not have these shares, that means today only you should have these shares so that you can settle it tomorrow. So that is, you have to buy the shares today to settle it tomorrow. Okay, so why you are selling at rupees 100 and why you are short selling? Because you know that the prices of, like in the Adani group, like the prices is going to go down. So you already know that the prices are going to go down. So you know that I will buy at 95 or I will buy at 90. So if you buy at 90, but you have promised to sell at 100 and the other person has promised to buy at 100. So that means you will be selling at 100. You are making the profit of 10 on every share. So this is the 1000 profit that you would be making. Okay, so this is the complete short selling. I hope now it is very clear. So I hope you are very clear. So Rahul, if you want to read about me, you can read on the website, I guess. So you can subscribe to our YouTube channel. Okay, as well as the PDF of this session will be provided in the Telegram channel. Thank you very much, everyone. And if you have any query, you can mail us here. If you have any query, you can call us here. Okay, any question that you have, I am here to answer that. Okay, okay. So accommodative and calibrative, balanced approach. Anyone that want to give the answer in the comment section can also give the answer in the comment section. Okay, so Millie, I have taken a separate revision session on the financial stability report. I will pin that session in the comment section so that you can see that revision session. But I have taken separate session on the financial stability report revision, okay, in which we did 15 questions on FSR or 20 questions on FSR. Thank you, Jay. Thank you so much. Okay, so I'm explaining you this, and after that we are ending the session. I hope your questions were answered. You can comment down below how much your marks were and write answers of the questions that I have provided you as the homework. Accommodative means for the 2 years, the RBI kept the rate unchanged at 4%. Now this 4% was very low when the RBI was keeping the repo rate at 6.50% at around February 2019. So this 4% was very low and RBI kept this low repo rate for 2 years. So this is the accommodative approach, that you are keeping the repo rate low as well as you are not thinking of changing it or you are not thinking of increasing it. When you are not thinking of increasing it, that is accommodative stance, and you are keeping it low and unchanging, or low or not thinking about increasing it. Calibrated balanced approach means you will see the inflation, you will see the growth, and after that, if it is the need of the hour, if it is the need of the country, you can increase the repo rate. In the accommodative stance, it cannot be possible that you are increasing the repo rate, because that will be the withdrawal of accommodation. So in the calibrated balanced approach, the RBI can increase the repo rate. Now is it clear? Okay, the PDF of this class will be posted by tomorrow in 24 hours. Okay. Any other question? Then I am closing this class. Thank you very much, everyone. I hope you liked this session. It was it was a great time for me to take this session. Thank you, everyone. I hope you enjoy your Sunday. Thank you.